Guys, NFP was absolutely crazy. We saw jobs growth slow pretty meaningfully, and in this video I'm going to break that down for you. But more importantly, I'm going to tell you what it means for gold. I'm going to tell you what it means for the dollar and for what stocks are doing here today, and whether or not all of this is sustainable or if there's some big reversals coming. Let's jump in. Before we start today's video, I do also want to mention that our Edge Finder sale is ending today. You can get 25% off if you shoot us a DM using the very first link in the description. Get access to all the indicators and tools that I use in our software, the Edge Finder, which has been built by my team here in Atlanta, Georgia. We work really hard to build the tools we do. And so if you have any questions or you'd like some more information, please feel free to chat with someone on my staff by clicking the first link in the description. So here's a look at the full market before we dive into all of these numbers. The S&P 500 is pushing higher. The Dow is as well, and so is the NASDAQ, just sitting just shy of its all-time high. Meanwhile, the S&P 500 is breaking new all-time intraday highs as we speak. Now, maybe there's not a coincidence here that the dollar index just fell out through the floor and continues to look pretty bearish here in the coming days and weeks. We see that reflected in the euro and the pound, which are both trading up on the day. Gold is overall up, and oil is kind of trading down overall on the day, but we'll see if we can bounce here from there. So let's get into some numbers here. I'll break this down as quickly and as simply as I can for those of you who missed the number or just need to have it explained to you. In the yellow, we have revisions. In red, we have the forecast, and blue, we had the actual. Let's start with these two first. The forecast for jobs here, for the month of February, remember we report in March the month of February's actual data. So in the month of February, what we saw is we saw the forecast to be this red dot here, which came out to be, by the way, 198,000 jobs created. That was the expectation. What we got instead was 275. So we beat. And you might say, hey, jobs data is great. And that's why fundamentals are tricky to new traders. This actually was not a great report at all. Let's break it down further. So you might say, hey, we beat jobs, this is good, dollar's gonna go higher, and then the dollar drops and you say, oh, fundamentals don't work, that's stupid. No, wait. Revisions, this is what it's all about. Last month, if you remember, NFP was a huge beat. It was a massive number. And in this month, in the latest data, they revised that number down significantly. So what was a really hot jobs data point last month got called into question as we revised that tremendously lower. And so yes, we beat on this month's reported number by a little bit, but we lost a lot of jobs in the previous report. But it doesn't stop there. At the same time, we saw wage growth slow year over year to 4.3%. So while jobs are slowing down at the same time, wage increases for people are also slightly slowing. This weakens the consumer and at the same time, the dollar. And one other thing to think about is this number right here. We saw the unemployment rate go up to 3.9%. And what you have to understand about this is that if unemployment rate continues to creep higher, if we get up in the fours, the Fed might start really considering rate cutting sooner to stop people from losing their jobs, right? They don't want people to lose their jobs. They don't want prices to go up tremendously, but it's hard to have both of those under control at the same time. That's been the struggle and the challenge for the Fed recently. We're starting to see jobs, a little bit of an evidence that we could be seeing jobs slide here. And so with that data in front of us, and now that we hopefully understand that a little bit better, feel free to rewatch that section if that was a little in-depth for you. Feel free to rewatch it. But here's something to think about. Why is gold up? Well, let's break it down. Jobs coming in cool, right? That's going to indicate that the Fed's going to have a little bit more pressure to do something with interest rates. So if jobs are coming down, that is going to probably pressure interest rates to come down. And if interest rates come down, the US dollar is going to look weaker. That's why the dollar's down today. And this scenario is great for gold. This is why the gold market continues to run, and this is why personally I remain long on gold. Here's my current position. When we look at gold, I'm currently up $5,768 at the time of recording this, and I continue to trail my stop. I have to say, I'm very grateful that I've been able to catch this move and continue to trail this stop, but not all my trades look this good, and I am also admittedly feeling a little bit of FOMO because I'm not in on the NASDAQ rally, which has also been really good. I point this out because while I'm on a hot streak and winning a lot of trades recently, it's important to recognize that FOMO is a real feeling, not just for new traders, but for everyone. I feel FOMO, and I know a lot of people out there who are watching this and they see that gold trade or they see the NASDAQ running up and they're not in it. They start to feel that FOMO and they can make some really rash and admittedly stupid decisions. So be careful in these environments. Whenever the markets get hot, just remember, things will normalize. Things will, this market might range bound before it goes higher. It might trend lower for a little bit. We don't know exactly, but don't let FOMO make you do anything dumb. I am also still long oil, and this thing has been pretty choppy here recently. My stop loss is below this low. I'm letting this market probably run through the weekend unless this thing dramatically drops, trails me out for a profit. This trade is actually bigger than my gold trade, but has really slowed down in terms of making any substantial gains. We're up about $5,700 on this one as well, and I'll continue to let it run. If it comes down here, I'll just take profits, and if it rallies, then I'll look to trail stops further. Here's something to think about. Today we get the commitment of traders data, and I am very, very curious to see what institutional money does with their positions on gold and oil, as I personally have trades in them. I'll also be seeing what they do with their NASDAQ position and US 30 and SPX, Bitcoin. I'm curious to see what institutional money does with this. Are they going to buy more? Are they going to sell positions? Are they going to short things? We get that data once a week on Friday. It gets automatically pulled in by our software, and it comes directly to your terminal here if you have a copy of the Edge Finder. The Edge Finder, by the way, it is a browser-based tool here, and by accessing this, you of course can look at this data when it comes out and interpret it with the top setups algorithm as well. If you don't have a copy, I mentioned this earlier, but today is the last day for our 25% off sale. If you've been thinking about getting a copy of the Edge Finder, what are you waiting for? There's been so many wonderful moves that are happening out in the markets, and if you've been missing them, I would encourage you to consider the investment of purchasing tools that help you spot more opportunities in the market. This one gold trade by far paid off any purchase of the Edge Finder for me. Like if I had purchased the Edge Finder, and my cost of the Edge Finder is not what the retail price is, right? I built the software with my company, so it's a very expensive product, but it's still worth all the money that I've spent on it because the trades that it helps me to find are so worth the investment. So again, you can pick up a copy right now for 25% off by shooting a message to the people on my staff who are standing by with the very first link in the description down below. When you click that link, you'll be directed to our website where you can speak with someone. Just click Start Chat and a real person will speak with you. All right, guys, I've saved the toughest one for last here. Why are stocks trading up so much on this number? Today on my stream, I had a long conversation before the numbers came out about what the NFP numbers would be. And I had a forecast, a prediction. I basically said that I think if jobs are good, the stock market would rally. And I said if jobs are not so good, the stock market would rally. Why is that? Because a lot of people were mixed on this too. They were wondering in the chat, why? Fundamentally, why? And here's the thing. If jobs data came out strong, people would say companies are really good right now. They're able to hire, they have a demand for labor that shows that company earnings are forecasted to be great. Stocks are going to make a lot of money, or companies are going to make a lot of money and their stocks are going to go up. That's what drives the indices, right? So kind of makes sense. Jobs data being strong is generally good for stocks unless it comes with some impending rate hike threat. But it doesn't right now. So jobs data, whether if it was good or bad today, in my view, is going to stay strong for the indices. Now, here's the problem, right? Jobs data came out poor and the market rallies on that. New traders, new fundamentalists, don't get ahead of yourself. This also frustratingly makes sense, okay? Jobs data coming out coming out weak, what that tells us is that the Fed is more likely to cut rates. Let me show you. So with the recent cooling data that we've seen out of the United States, in combination with today's jobs numbers, we now see a 74% chance that we won't rate cut in May, but we've jumped up to 25% chance that we could. And this is a big change. It's a big shift. Because remember, a lot of people, myself included, I thought we might see a little bit further out rate cuts. That was why I was bullish the dollar for a while. And I have to say, I took a loss on my dollar trade, but it was a small one. And I got out of that dollar bullish thesis before the big drop off here that we saw today. So I'm feeling pretty good about that. I'm not dollar bullish at this time. Right now I remain long gold and other commodities. I'm long gold, silver, and oil. So, you know, I have switched camps ahead of this big drop. But I thought for a while that we would see jobs, you know, or strength in the US economic data that just would be continuously stubborn. And I have to admit, I was wrong, right? I'm not, you know, I'm not an economist, right? So I'm a trader. I react to what we see. And here's what we see. We see a 60% chance that we're going to see our first rate cut. Actually, here's a better way of saying it. Only a 22% chance that we will not see any rate cuts by June. That is a major change in the game plan. That alone, by the way, is why I stay long gold right now. That is why I'm letting gold run, because this shift in the narrative is bullish for gold. Gold rate cuts, I've said this at the beginning of the year. I've said it all through this year. When rate cut expectations improve, gold is my spot. And that's where I've been. So I've stuck to the plan, and it's paid me nicely to do so. Again, I missed some of the move on the indices, and I think that there will be corrections and pullbacks and things to take opportunities there. So right now, my top trade is continuing to be gold. Letting the one that's working work. Anyways, yeah, that's what this jobs data here today. That's why it's really moving the markets. It's not a technical thing. It's not a, you know, hey, it broke this level of resistance. No, it's a fundamentally driven move here today as rate cut probabilities are dramatically changing, and that impacts all of us, whether you trade, invest, or not. It impacts all of us. That's why fundamentals matter. So there's my pitch for why the software is worth the investment. If you're looking to get into fundamentals, if this sort of video was helpful to you and you want to be able to do this stuff on your own, pick up a copy, take advantage of the sale before it ends. And also, if you're looking for a new broker, if you'd like to support my channel, I've got a couple linked down below in the description. If you're looking to trade FX in the United States, there's a broker for that. If you're looking for FX, CFDs, etc. outside of the US, there's a link for that. And if you're looking to trade stocks and options, there's a link for that. If you choose to use those referral links, you'll be supporting my channel, and I'll very much appreciate it. Thank you guys very much for watching, and have a great weekend. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.